what's interesting is in economic downturns and cycles, there's like the 90% of people who are kind of just like, oh yeah, we're in good times, whatever. Then there's like a handful of people who are like being more conservative. And then there's like 1% of people who are the ones predicting that something bad is going to happen. What's interesting is this car, you call it the Automotive Apocalypse, right?
Yeah.
Is what you call it on your channel. And you've been saying this like since before it happened. What were the signs that you were looking at that you're like, oh, something bad's about to happen?
It came back in 2020. So when I sold my dealership to a bank, and I stayed on for the next 90 days to help train their people and everything else. Pandemic hit, so I ended up not leaving. I ended up staying and then working on my YouTube channel. And one of my jobs is I was going around buying paper, which is auto loans. So my job was to go to different banks, different dealerships, and say, hey, we're buying auto loans. What do you guys got? So I would look at all the loans that these dealers were issuing for cars, and I saw one, basically, I guess, how do I say it nicely? One very negative item was they weren't doing proof of income. We have another thing that we stick by all the time, which is called LTV, loan to value. We always do, like if you're subprime, it's like 90% LTV. If you're prime, 110, 120 at the most, sometimes 130 if you're rock star. They were giving subprime people 150, 160, and prime people I've seen all the way up to 180, 190% of LTV, which means that if the car was like a $10,000 Toyota Corolla, they would give you up to $19,000 on that car for a loan. And they wouldn't even check at your income. They wouldn't verify it. So all of a sudden, I started seeing all these loans rolling out because the way they justified it in the car business was, well, they're giving us $3,000, $4,000 down. They have big money down. And I'm like, yeah, but that's not good. And then what happened was it went from subprime to prime. We had people paying $100K over MSRP for G-Wagons, all the crypto bros. I got 50 grand. Let me put 50 grand down on a $100,000 over MSRP G-Wagon and I'll be all right. And now these people are stuck with cars that they're literally 80, 90K upside down in. And as we started to see this, I started telling people this can't last forever. Something's got to give. And it was so funny. It reminds me of 08. It's not bad. It's only going up. Don't be negative. This is just the new trend, right? And then fast forward to 2022, people are like, oh, shit, it's getting bad. Like banks are defaulting at record amounts of numbers. People are walking away from their cars like they walked away from their houses. And the reason why I kept screaming from the hilltops like this is a bad deal is I don't want it to turn into what the housing did. Because now when you buy a house, you have to qualify for it. So, back in the day, the ninja loans were, you just throw in some docs and you get qualified for a house. Now the government will tell you how much of a house you can afford, which I think is the worst way to do it. So the best way I can relate this is you could rent a house for $3,000, but you can't afford a $2,500 mortgage. So even though you can show the government, hey man, I've been paying $3,000 a month for the last 2 years, I want to buy this house and save me $500. Oh, sorry, you don't qualify for that mortgage. You can go ahead and continue paying $3,000 a month for rent. I guarantee you, if the government steps into the automotive industry, we are all screwed. Everybody that wants to drive a Mustang, Camaro, Corvette, they're all going to be luxury cars considered. You won't qualify for one. 90% of Americans have way too much credit card debt. Their DTI is going to be all out of whack. They'll basically make it where you can't afford a new car unless you're putting $20,000, $30,000 down. And I keep telling people you do not want the government to step in. And right now, if the banks need to be bailed out, the government's going to want to put some sort of regulatory in to make sure this doesn't happen again. And this is what I'm praying it's not happen. But it's getting very close because now it's getting so bad. Banks are actually afraid to repo cars because they can't get rid of them at the auction because of the massive deficiency they're going to get. So if, let's say, I repo your Tesla, you paid $120,000 for it, and I take it to the auction, somebody offers me $85,000. I have to eat that $30,000 or $40,000 of negative equity. So as a small bank, I can't afford that. So they just keep running it. So now what banks are doing is, okay, we're not going to repo your car. We're going to give you a grace period of another 90 days. So we're going to take your, whatever, let's say you're 60 days late. We're going to put that on the back end of your loan, and we're just going to let you catch up from this date. They'd rather give that the opportunity than repoing the car and losing $30,000.
So one thing you said though is like if banks come in, if it's one of the issues was that dealerships weren't looking at income, right? And
banks, not the dealers. Yeah, the banks.
Okay, so the banks aren't looking at it. And so with that being said, though, you're saying that one of the things that the government's done is they actually, there's restriction on buying houses. So wouldn't that be better and prevent something like this from happening?
Yes and no, because anytime the government steps in, they're going to have all these, rules that don't really make sense. Like I said, you as a person, if you don't qualify for a $2,500 mortgage, you're stuck to pay, let's say, a $3,000 rent.
So banks do. So, the government does regulate mortgages, but they don't regulate car loans.
Correct. Yeah. So right now, if you make $2,000 a month and your credit's good and you have a good enough down payment, and a bank's willing to take the risk, they'll give you a brand new 7 Series at $1,500 a month, even though it's going to take up 90% of your income. There are some banks out there that will do stupid lending like that, where.
So legally speaking, when it comes to a house mortgage, you can't go over that 40% debt to income.
Yeah, whatever that is, that's pretty much it. Now you can get special like hard money guys and stuff that'll do weird stuff, but if you go for like an FHA loan or something traditional, you have to abide by certain rules. You have to fit in a certain parameter. And so if they were to do that in the automotive industry, I mean, this is funny, and I don't think people realize is like something like a normal Tahoe, right? Family SUV. How much do you think a brand new Tahoe costs?
Dude, probably like $65K.
$85,000. So a freaking Tahoe is $85,000.
I probably would have guessed higher, but I didn't want to ruin your point.
Yeah, $85,000.
It's a family car.
If you want to get an Escalade, it's $110,000, $120,000. So now you got a I'd say $1,700 to $2,800 car payment for a normal car. We're not talking exotic or anything crazy. So how are Americans supposed to afford this? During the pandemic, I saw banks putting out 96-month loans, 84-month loans. They were just extending it out almost like they were talking about doing a 40-year mortgage so they can make it affordable for people to get into debt instead of working the other way around, like making the cars cheaper, making people buy what they can actually afford. So if the government steps in, auto manufacturers are screwed because all the new cars they're making, people can't afford that. Nobody wants to pay $80,000 for a truck. Mm-hmm. That's insane, And even like economy cars, some of these Teslas, like we talked earlier, Tesla dropped their price 3 times. EVs are going to do the exact same thing. EVs right now are going to be the hardest to hit because I know that their sales numbers are down just this year alone, 38%. People thought EVs would take off. Complete opposite. That's why Tesla's dropping their price down, is because all these companies like Ford, Chevy, Honda, Toyota, Hyundai, they're all jumping in the EV market, and it's hurting Tesla, and then people just don't want to buy them.
Are you noticing that is it because there's more competition for EVs, or is it that demand is down?
Both.
Because it seems like demand for EVs it's becoming more normal for someone to have an electric vehicle.
There are more charging stations, there's more infrastructure to support it, but at the same point, the savings is just not there. When you can buy a affordable economy gas car for $8,000, $10,000, $15,000 less, more average Americans, especially if you're cash strapped, like if you can only afford a $500 payment and getting one of these EVs is $550, but you can get an economy car for $500, you're kind of going that way. That's why I thought the Tesla thing, they're eating at their own market share. You can only sell $60,000 Teslas for so long before people just start walking away. And like I remember when the Plaid was 100 and something, and they were talking about raising it to like 130. The Porsche Taycan came out. Audi has their e-tron. A few of these other manufacturers are making luxury electric cars. The build quality is completely. I mean, all you got to do is sit in a Taycan, sit in a Model Plaid. You can just see the difference, feel it. And then now they're like, okay, we need to lower our prices. We need to become more competitive because everybody's jumping into that market. And I think people were going to go more to the EVs because of the whole green thing, but most of the people I talk to, they're just not into it. Like Teslas are cool. Like, we have these conversations off camera, and I make fun of Tesla drivers, which I love. I mean, they're ahead of their time, but now they don't do anything innovative. The cars look the same. I don't know if you saw the new Model 3. It was a big deal. Like they're like, oh, we're going to redesign it because everybody's making fun. Like all Teslas look the same. I swear to God, if you put the Model 3, it's like a little change of headlights and a little bit of body curvature. You can't really tell.
And